what's going on in the banking space. And by that, we mean the continuous decline in the Swiss bank and the Deutsche Bank. Will the two banks collapse? And what do the experts say about their recent crash?
And we never saw really any improvement in volume through that phase. And then once we rolled over in August, the volume has started to pick up again with the down move. And here we are very quickly back down at the lows for the year.
In today's video, we will talk about what will happen to the market in case the Credit Suisse Bank and the Deutsche Bank collapse, and what caused these disastrous results. Swiss Bank is the second largest bank in Switzerland and is considered to be at the center of market turmoil. We can say the same about Deutsche Bank. The bank itself is in no better condition, and rumors are saying that the bank is having significant financial issues. In this video, we will reveal what is happening and what are the reasons for the crash. But before moving on, don't forget to subscribe to Financial Countdown and ring the bell to be notified when new content comes out.
Lehman Brothers is going bankrupt.
It almost seems like what happened in the last financial crisis of 2008, when the Lehman Brothers Bank collapsed and from where the whole market fell apart.
The U.S. government said it won't bail out Lehman, which last week announced more than $3.9 billion in losses. Shares in Lehman Brothers have plummeted more than 80% in 2008 alone.
Lehman, like so many other investment banks and banks, really got, quite frankly, caught up in the housing bubble. But like every bubble, the bubble ended, and now we're seeing the downside of that bubble.
Following the same risky practices that sunk former giants Fannie Mae and Freddie Mac, Lehman also had a hand in securing America's high-risk subprime mortgages, believing that the popularity and sheer volume of those loans would net huge gains.
Let's face it, even though both banks are considered the two largest European banks, the extreme market volatility and recent major changes have caused some sort of financial difficulty for them. In recent years, the Swiss bank has been accused of laundering money for a criminal organization, hiring private detectives to spy on their own employees, facilitating corrupt loans to Mozambique, and the list goes on. On top of that, in 2021, Credit Suisse took a hard loss, estimated at billions of dollars. Plus, since January 2022, the Credit Suisse Bank has plunged more than 57%, increasing its common trust issues among its long-term clients. According to the leaked memo released this week, the bank officials and CEO have urged their employees not to panic amid rumors that the bank will collapse anytime soon. The last Monday, the bank's share prices fell more than 11.5% to a low average of $3.3 per share. The bank executives commented that the memo was a regular memo and nothing worth worrying about. The Swiss bank's chief executive, Ulrich Körner, says that the markets and media are both wrong. Yet Reuters reports got their hands on the memo copy, and it included two worrying terms. This is a critical moment for the organization and a challenging period.
We were as a company under fire, and he as a CEO was under fire. He did a great job, but he decided to step down.
Those were the words that Körner used to describe the financial difficulty that the bank faces. Critical and challenging are the exact words that describe the current situation at Deutsche Bank and Swiss Credit. In terms of liquidity and capital, the Swiss bank is much more suited than the 2008 Lehman Brothers banks. Market analysts are trying to analyze the significant difference between the two banks and what happened in 2008 and now. And for that reason, the probabilities of a collapse are not that high. Yet it remains a possibility, since the European economy itself is facing a recession threat. However, at first glance, it seems that the Swiss bank will not collapse as fast as the Lehman Brothers did then. Yet the leaked memo on Monday raises significant concerns and unanswered questions. Scandals, low confidence, and declining share prices all contributed to the collapse of rumors. Plus, there is another contributing factor: credit default swaps, which are currently at their 17-year high. That takes us to why we are seeing a rise in the credit default swaps in the Deutsche Bank. And the reasons are higher interest rates and the all-time 40-year high inflation rate. That said, there is a solution or a way out for the two banks, but that requires extra capital and fresh investment. Unfortunately for Swiss Credit and Deutsche Bank, it seems that the two are running out of options, especially fresh investment opportunities. In terms of the future outlook, a recession probability in the European market has increased. Your opinion is very important to us. You can leave it in the comment box below this video. Thanks for watching.